Hi, I'm Rick Van Wieren from Remax Properties, and welcome to Rick on Real Estate. I've got as my special guest here Lonn Rodd from our South office. Remax Properties is the largest real estate company in Colorado Springs, and Lonn works at one of our southernmost of our 4 offices. I work at the North office. Thank you so much for joining me, Lonn. I really appreciate it.
Thanks for the invitation.
This is kind of a little different take on things because normally we're bringing in third-party guests for these, and this is the first time I've ever had a fellow agent kind of join me on this. But Lonn and I both happen to have in common an interest in numbers, and we're going to go behind the numbers today and talk a little bit about what's been going on in the real estate market locally and how to interpret all that. So Lonn and I kind of come at this from 2 different perspectives, and so I thought I would lead off and then let Lonn take it away with some of his more detailed analysis of some of this information. So in the month of September, there were 1,278 homes sold in Colorado Springs. And currently we are sitting on just over 2,400 homes for sale. And if you kind of calculate that all out, it means basically we have less than 2 months supply of inventory. When you go through and look at the details of how that breaks down, the bottom 25% of those, I'm showing that break point is about $255,000. And that we have had 269 homes for sale at that price point or below last month. The next breakout, the second quartile, we're talking 255 to 306, and 306 is roughly the halfway point, the median. And I'm showing we had 335 homes, so just barely over a month's supply in that category. And then when you get to the third bracket, we had 557 homes in that bracket, and that's when we start looking at closer to a 2-month supply, but not quite. And then the most expensive bracket starts actually at only 388,000. That's the fourth quartile. I showed 1,269 homes, which puts us closer to a 4-month supply for that category as a whole. Mm-hmm. You go into much more detail with this, though, Lonn.
And I break it down a bit more, and I know this might sound considerably different than the numbers Rick was mentioning, but actually they're really quite close. For instance, up to 300,000, I have less than a 1-month supply. 3 to 450,000, 1 to 2 month supply, or between 1 and 2 month supply. From 450 to 700, 2 to 3 month supply. And 4 or 5 months at 700 to 900,000. At $1 million to $1.5 million, a 9.5 month supply. And if one is lucky enough to have a home greater than $2 million, there's a 52-month supply, which is over 4 years.
Yeah, so we definitely get into some serious numbers.
When somebody says buyer or seller, you have to say, which segment are we talking about? That's buyer or seller.
So why are these numbers important to begin with? When we talk about a 2-month supply of homes, how does that compare in your mind to, would that be considered, I think, a seller's market, right? A 2-month supply of homes?
Yeah, definitely. Yeah.
And at what point do you read more of the national kind of syndicated articles on all this stuff, but at what point does that kind of cross over as far as how many months supply do you consider kind of a normal market?
Well, that depends on how you want to define it too, but equilibrium market, I guess one could call that a normal market.
Or balanced, maybe?
Yeah, or a balanced market. And traditionally, and I'm not saying there's any factual number one has to stick to here, but traditionally through the years, a 6-month supply was considered the breaking point between a buyer and seller market.
Okay.
So if it's less than 6 months, you're in a seller's market, and if you're greater than 6 months, you're in a buyer's market. But that's a macro sense and from a macro viewpoint, and it can be used to compare here against San Diego or here against Austin or whatever, or it can be used to compare here today to 5 years ago. What has it changed? Now, Rick's approach is more I guess I would say, dynamic in terms of where are we today, in fact, in a practical sense, coming right down to how long does it take to sell your home, what is the marketing approach, et cetera. So,
well, and you said that to compare it from 6 years ago or whatever. So the last time that the Colorado Springs real estate market hit a 6-month supply of inventory, based on my numbers here, I'm showing was back in February of 2012. So we're talking 6 years ago.
Right.
For a month, we hit a 6-month supply, and we have not hit a 2-month supply in 2 years. I mean, I'm showing February of 2016 as being the last time we even got to a 2-month supply here locally. So we've been in a pretty strong seller's market here for now several years.
absolutely. Yeah.
It feels like the market's changing a little bit. We were in I think we hit a low point earlier in the year. We were at literally a 1.1 month supply. That means we were selling every house that got listed pretty much at that point in the month that got listed. It was crazy. It feels like it's getting a little more normal.
Right.
We're still not even to that 2-month supply. But what are you seeing right now as far as listings, how long they're staying on the market, buyer and seller negotiating positions, and so forth? I mean, what's your take on all that right now?
Well, I think I would dovetail with what you're saying because, and again, I look at the segment. For instance, 1 month. I immediately go to my sheet and say, well, yeah, 1 month supply means the segment is below, let's say, 300.
Right.
But and there's another consideration. You and I were chatting about this before, and it's becoming more and more important that the house be in really good condition.
That's a really good
point.
point.
It's not just price. So those of you that are watching, that are planning on going on the market soon, that's more important now than it was even 6 months ago.
Absolutely, absolutely.
Yeah.
I mean, back in the April-May timeframe, we were dealing with just crazy numbers of offers coming in on houses under 300. Right now, we're still getting offers quickly on houses under 300, but maybe not 6 offers anymore. Maybe it's 1 really good offer, but it's still happening if the house is in great shape. And as you pointed out, and if they're not, they sit a little while.
Yeah. The signs stay there a while.
Yeah. So, in terms of the why that number is breaking at that 300-ish kind of point, it feels like we're getting into some affordability issues for some people as interest rates have started to go up. I mean, we're starting to hear 5s in interest rates, not necessarily always seeing 5, but getting close to that. And there was a time when 4 was kind of the high end of that range. Do you sense that the reduction in purchasing power that comes with higher interest rates will continue to kind of throw a little bit of a wet blanket on things going forward?
Yes, absolutely.
Okay.
Yeah.
And then what about the fact that our prices are up so much? I mean, last month we were still up 11.2% for our median price over a year ago. That's quite a jump. I mean, double-digit appreciation is not something Colorado Springs has seen a lot of in the last 20 years. What is your take on the rate of appreciation that we're going to see going forward? Just from your perspective. I'm just going to hold you to this. Crystal ball has a little blanket over it, so we'll...
with 2 numbers guys talking to each other, now wait a minute. How do I analyze that to answer that question right to this point? So really, just based on experience, past experience, and if one were to graph markets, I think through the years, you'd find maybe increases like we've been experiencing. But then it maybe starts leveling off for interest rate reasons, for job production reasons. The rooftops that sell are directly related to the number of jobs we generate.
Which we're generating a lot of.
We're generating a lot of, and we actually don't have the level of people we need to meet jobs. I think I saw an article that I don't recall how many jobs.
10,000 jobs was what I had seen that were sitting open at the moment.
Yeah, and
which, by the way, if you're highly qualified for technical jobs, we've got some here.
Looking.
This is Colorado Springs is one of the top 20 cities in the country right now for technology.
Correct.
And so we have jobs here for sure.
Yeah. So I think that I think that just following intuition and based on past experience, where, if you will, we've had this dramatic increase in price for us, and now I believe it's more or less leveling off right now, taking a breather. And I think engineers call it ringing at the end of that slope. It,
Okay.
it pops up and down a little bit and rings a little bit, and then from there on, I mean, my crystal ball really has never been real clear beyond 90 days. I mean, things change.
They do.
International events, money market,
Yeah, absolutely.
whatever. There are tons of input into what determines a marketplace. Right now, it's a great time to sell. In my opinion, it's always a good time to sell, but it's still a good time to sell now because interest rates are still close to record lows and et cetera. So now would be the time.
Yeah, this is actually one of those rare times when you can truly say, whether you're a buyer or a seller, it's a great time to make your move, because I think that we're sitting in a position where we are going to see appreciation still happening, not at 11%,
Right.
but maybe at 5 or 6, and at the same time, interest rates will not be lower by this time next year. I can virtually guarantee that. Much better than a Bronco win on a Sunday afternoon. I think that we're going to see higher interest rates and higher prices if you look at what will be here a year from now. And so if you're a buyer, you can't buy at a better time than right now. If you're a seller, though, it's the same thing, because we do have such a short supply. This really is a good time to expose your house to the buyers we got out there.
And if you're doing a local move,
yes, absolutely,
downsizing or upsizing,
and that's
be a good time to do it right now.
Yeah, and you raise a really good point with that, because if you have a house that's in the faster moving segments of the, under 300 or even mid threes, your house is going to sell at a good price and fairly quickly, still, if it's in good condition. And you can move into one of the slower segments where, if maybe you're looking to 600,000 or 700,000 on the purchase side, they're sitting around a little longer. And so your leverage is actually really good right now. Lonn, thanks so much for joining me today. I really appreciate you spending the time with me, and thanks for joining me on Rick on Real Estate.